This week was very interesting. On my $15,000 trading challenge, I managed to grow that account from 9% to just above 12%. And in this video, I'm going to walk you through what I traded and how I managed to achieve that feat. But before we get started, I think it is very important for me to provide context here. Trading, it comes with some risks, especially if you don't understand what you're trading. But there are also some rewards. For example, in my case, I am now using trading as my source of income, right? But it has taken time, and it is very, very important for me to share with you that this has been a journey. I started seriously taking trading last year after I lost my job. And I asked myself, actually, I have a degree in economics, master's degrees, but how can I make money from the market? And I have a friend who was at that time based in New York, and he was like, Isaac, I can teach you how to trade options. And I've shared this story in the past. But for those who may not have seen that video, and this guy, Kuda, if you are watching this video, thank you so much for transforming my life in a positive way in this case. So when I started working with Kuda, Kuda is very knowledgeable, and he, showed me, using his methods, how to manage risks, the importance of, understanding how to use indicators. And as an economist, it was very easy for me to then grasp those insights because I understand GDP, I understand those basic things like employment, inflation. Now, after I traded options, I was able, fortunately, to make a bit of money more than I lost. I realized that options are very, very risky, especially if a trade doesn't go in your way within a specific given time. And that's when I then realized, like, okay, let me just study the market and understand a few stocks that I would track. And what I found was very interesting when I was just testing the data, because I realized that the S&P 500, usually I think it's a pretty standard thing, it's a pretty known thing. The equities market, the S&P 500, these are the top 500 companies in the US. And each time it goes up, usually in most cases, the volatility drops, the volatility index drops. So it has different gauges, sometimes fear, extreme greedy. And what happens is when the equities market, people are very excited, it's going up, usually the VIX index drops. And for me now, I trade the exchange traded funds that track the volatility index. But I make money if the market is going up, the equities market is going up or down. Now, in addition to the VIX, I like to understand other individual stocks that have strong fundamentals, for example, NVIDIA, Tesla, but because most of the shares, they are quite expensive. For example, if you are looking at NVIDIA shares, there was a point when it was $153. So that means I would need, let's say, 15,000 US dollars to buy just 100 shares, because to be profitable, at least I think you should have, maybe some quantity, so that if it moves by 30 cents, 40 cents, because when I'm day trading, that means I'm getting in and getting out within that day. So I should have a bit of capital. Otherwise, then you are forced to then trade stocks that are maybe cheap, in the sense that maybe they're penny stocks, they are less than $5, but then there's a risk in that case. So there are quite a number of things that I follow, and I'm not going to break that down in this video. I'll do another video to just walk you step by step. Now, after I realized that, I then realized that they are what are called leveraged ETF. They might be leveraged two times. That means if that security that they are tracking goes up, let's say, by 10%, if it's leveraged two times, it means the gains might be amplified, it will be amplified twice. Likewise, if the market drops by 10%, it means it also drops twice more, by 20% in that case. So that means you have to extremely manage your risk. But for me, that gave me the amplification that I was gaining on the options. But the options trading, basically, you are basically betting that I will be right within this given time. Whether you are right or wrong, there's a decay. In other words, there are some parameters, Greek parameters. And what I realized was that sometimes you could be right when I was trading options, but because the market dropped and then went up, because of the decay factor, you could still lose money. So I then decided to just focus on leveraged ETF. Now, leveraged ETF, that would be, shares. Sometimes I do invest ETF, or sometimes those ETF that track the securities, in that case, without shorting a particular security. That was just the background. Now, that's what I trade, and things may change, but so far, what I do is I like to understand what's really going on in the macroeconomy. That means I like to read the Barron's or maybe CNBC. What are the top things that are happening? And when I'm trading, I'm watching Yahoo Finance or Bloomberg on the TV here to see, if there is something. But at the back of my mind, the most important thing is to look at my trading plan. I have indicators that I use, for example, the RSI, relative strength indicator index, and also the volume. I don't like to trade stocks that do not have over 1 million in terms of the volume, because I want to get in and get out. Now, based on what I have observed, that's how I do my trading, and then I do my charting to say, this is the demand zone and the supply zone. Now, why is this important? Because how price for stocks in this case move, it's usually because of the imbalance between demand and supply, right? What do I mean by that? There are people who are buying, so they could be institutions, retail traders like me. So if there are more buyers in that case relative to the sellers in that case with a fixed number of shares, what that means is if they will more likely push the price up forward, that means the price will go up. So I want to just capture that momentum. If maybe the price moves by 50 cents, by $1, and I have 2,000 shares, that's $2,000. I'm done. And I do not necessarily say I want to make this much money. I see what the market gives me. Now, let me just walk you through to just show you my trading results for this week, like I promised, so that I can then just conclude by giving you some insights in what I see the upcoming trading week. In this case, you're seeing this video on Monday, so that's the trading week this week, but I'm recording this video on Friday. So you can see last week, my trading account was 9%, 9.46 up, and I had $2,066. These are Canadian dollars, right? And my broker, because I'm Canadian in this case, and this is the default that I get on my broker. These dollars, they are in Canadian dollars. Now, you will see that I like to have cash all the time because that allows me flexibility. So last week, that was my trading account at the end of the week. And this week, I managed to grow my account to 12.29%. And you can see that my profit so far since I think right about Christmas in 2024 is now $2,686 in this account that I'm showing you. So I don't spend most of my time trading. Maybe I'm just spending 1 or 2 hours. And sometimes I day trade. After maybe I make a few dollars, then I do other things. But the most important thing here is that what I am seeing is that at least there's some growth. And the most important thing when I am trading is that I want to be consistent to balance the risk and reward ratio, right? You might be profitable, but if you make one silly mistake and you don't manage your risk, it can then go down to zero. So the most important thing is to be consistent. So in my case, I have a strict trading plan and I manage my emotions to say, sometimes if my checklist is not ticked in terms of the things, the parameters that I look at, for example, the volume of that security, and also the volatility, the demand zone being met in terms of my technical analysis, then I'm not going to be taking a trade. For me, it's as simple as doing that. I will do a video to just share with you some of those specific steps that I look at. But suffice for me to just share with you something that was interesting and one trade that I took today. So you can see here that, for example, let me just give you an example. You can see that the S&P 500, interestingly, it started on a green, right? It was up. You can see here the S&P 500, it was up and it was very green, right? And I think this is, let me just do for a day. And what then happened, you can see here, right? Um, What then happened was that because there was the issue, they talk about the tariffs, right? Because the market was, I remember I was talking to my friend and the market was really green. It opened at this point and then it went up. But then when the White House today confirmed that they will be going ahead with levying tariffs on Canada, Mexico, and China, the 25% on US, on Canada and Mexico, the text will be released, as they said, tomorrow on Saturday. Now, the market, equities market dropped. And what then happened was that the VIX then spiked because as the market was going up, the VIX, the volatility index, it was dropping. So when it got to the level that I had analyzed to say, well, if it gets this security gets to this level, I'm going to buy. That's when I got in. But I remember I was actually recording with my friend, the podcast. And what then happened was that in no time, I got in around this level and I was focusing on my recording, the podcast. And then I saw on the trading view chart that was on my other computer, it spiked. And what I ended up doing, I just decided to just lock in the profits and I took the profits across the accounts that I had bought some shares. So it was as simple as that. My thesis was that when this announcement of the tariffs, because President Trump had said, they will make a decision by Saturday, at the end of the day, the market was more likely going to price in that. So once that announcement was made, then the equities market started dropping and the VIX went up. So those are the events that I look at. But the most important thing is when I'm trading the ETF that track the volatility index, and also sometimes I trade stocks such as NVIDIA through their leveraged ETFs. There are certain levels that I have to, the conditions that have to be met, for example, right? For example, on Monday, we are watching this video today. If the market drops, right? Let's say the equities market, NVIDIA is down 10%, 20%. Then for me, I will be trading equities because I'm all in cash in terms of my trading account. And then I'll be trading NVIDIA because the stock does not necessarily go down in a straight line, right? Sometimes it goes down, up and down, and I will be scalping for those up and down swings. That's what I do, but within certain ranges after satisfying certain conditions. So I thought I would just share this with you that, in this case, trading for me, it's a journey, it's a learning moment. I don't know how the year will end in terms of my profit or loss, but the exciting thing is that I am looking forward to Monday, to the coming week, and I'm going to be focusing on hopefully growing my account. But the other important thing is to learn along the way. So I thought I would just update you. And if you want to learn more about trading, make sure you reach out www.streetwiseeconomics.com, or you can share your questions on the comments below. Subscribe and follow me on social media. I have been doing my best to stay abreast with what's happening in the financial markets, particularly the US and Canada, because I like to learn from other people. So I also contribute in several newspapers in Zimbabwe and via my social media platforms. Like if you go on my LinkedIn platform, Isaac Jonas, you will see that I regularly share some insights. Now, I hope the market will be on your side and May you trade and invest wisely, and always remember that the market comes with a lot of opportunities, but also risks. So educate yourself. If you don't understand how to do that, consult a financial advisor, or if you want, you can have a conversation. That's it for this week, and have a wonderful time. I will see you in the next video. Bye bye for now.